Nasdaq-listed Enovix Corp, an advanced silicon battery company, will invest a total of $1.2 billion or 5.8 billion ringgit in Malaysia over a period of 15 years, which includes a 315 million manufacturing line announced in August. CEO AJ Marathe said that after 3 decades of personally working closely with the Malaysian government authorities and having successfully built and run several large factories, choosing Malaysia for its first high-volume manufacturing facility was an easy decision, according to him. He cites Malaysia's deep pool of technical talent, business-friendly environment, and close proximity to manufacturing facilities of Enovix's vendors and customers as reasons why the country is an ideal location. The manufacturing line, co-partnered with YBS International, will be located in Penang. Enovix Malaysia is currently in the process of installing its machinery, and this is projected to be fully operational in 2024, it said in a statement. The company's investment plan was disclosed to Prime Minister Datuk Sri Anwar Ibrahim during a one-on-one meeting held at the sidelines of the Asia-Pacific Economic Cooperation Leaders Week 2023. Investment, Trade and Industry Minister Tunku Datuk Sri Zafrul Abdul Aziz said Enovix's establishment of the high-tech battery technology facility in Malaysia is in perfect alignment with the missions of the new Industrial Master Plan 2030. He adds that it promises significant spillover impact, notably the creation of substantial high-quality job opportunities for Malaysians and the enhancement of the nation's industrial landscape. Enovix is headquartered in the US with locations in India, South Korea and Malaysia. Enovix's battery technology application extends to the Internet of Things, mobile computing devices and vehicles. Pecca Group, who saw record profits and revenue for the past 3 financial years, says it is confident of maintaining its earnings momentum with another set of all-time high figures in the upcoming FY 2024. CEO Fu Ken Ni said that the automotive upholstery maker expects to do even better than the previous year, supported by a strong 3 to 6 months backlog of orders received from the car makers. The Malaysian Automotive Association has projected the country's total car sales to rise to a new record of 725,000 units in 2023 from 720,658 in 2022. Pecca is constructing its second manufacturing plant in Serenda, Selangor, which is expected to commence operations by mid-2025. Fu says upon completion, the group's annual capacity will double to between 400,000 and 480,000 seats. Fu said the brand is looking to expand its market by venturing into the luxury car brands market. Currently, Pecca equips leather upholstery car seat covers for Perodua, Proton, Mitsubishi, Toyota and Nissan. For its first quarter, Pecca saw its net profit spike by 56% year-on-year to 13 million from 8.35 million previously due to higher sales volume from its automotive segment. Top line grew by 17% year-on-year to 64 million ringgit. United Plantations recorded a 19.8% improvement year-on-year for its third quarter net profit, which came in at 235.68 million, thanks largely due to lower operating and income tax expenses. This was despite quarterly revenue declining by 17% to 540.2 million from 649.6 million amid lower average crude palm oil and palm kernel prices and the easing of its share results from joint ventures. The group declared an 80-cent dividend for its FY 2023, comprising an interim payout of 40 cents per share and an extraordinary dividend of 40 cents per share. UP noted that palm oil prices, which ranged between 3,637 and 4,209 per tonne in the third quarter, have come under pressure amid the seasonal increase in production in Malaysia and Indonesia, in tandem with stocks rising to its highest in more than a year. As such, UP said it is mindful of the challenges which the final part of 2023 will bring amid consequences of higher inflation and recession fears and the escalation of global conflicts in Ukraine and the Middle East. In the meantime, the group said it will continue to direct further attention to implementing greater level of mechanization and to complete its replanting program to take full advantage of its latest high-yielding planting materials produced by its research department. Salutica, which is involved in a legal suit with Apple's unit in Malaysia for alleged patent infringement, on Thursday filed a similar suit against the US tech giant's Singapore-based subsidiary, Apple South Asia. The new suit filed at the Singapore's High Court by Salutica's wholly owned unit, Salutica Allied Solutions, which manufactures mobile communication products, wireless electronic and lifestyle devices, and vertical integration processes covering design and development. SAS is seeking, among others, a declaration that its patent is valid and has been infringed by Apple South Asia, and an injunction to restrain the Apple firm from making, disposing, using, importing or keeping products that infringe the patent. SAS is also seeking an inquiry on damages, or alternatively, at SAS's option, an account of profits made by the Apple unit arising from the alleged infringement of the patent. It explained in a BOS filing that the FOBO tag and the FOBO tire, which are SAS's own products, incorporates a number of Bluetooth technologies invented and or developed by SAS. Salutica said SAS had on November 6, 2023, through its Singaporean solicitors, Amical Law, issued a letter of demand to Apple South Asia in respect of the alleged infringement of the patent. Salutica said the new suit in Singapore is not expected to have any operational impact on the group and SAS. In addition, apart from the amount claimed by SAS and the corresponding legal costs, the suit is not expected to have any material financial impact on the company for FY 2024. An economist on Thursday urged the government to deliver on its promises of reforms that would eventually strengthen investors' confidence in the country's prospects and potentially stem weakness in the local currency. Socioeconomic Research Centre Executive Director Lee Heng Kwee said that while the current weakness in the ringgit mainly due to a strong US dollar and interest rate differential, capital flow data indicated that confidence also plays a role. Speaking at the Deloitte TaxMax seminar on Budget 2024, Lee explained that with the widening gap between the US Treasury bonds and Malaysian government securities, investors will continue to take money out from Malaysia and put it stateside, and that will continue to cause the capital outflow. With broad expectation that the ringgit would continue to weaken, Lee said exporters might not dare to convert their export proceeds into local currency, even if they have repatriated these monies back into the country. He adds that the government has to continue to improve the country's fundamentals so that not only domestic investors will put their money here, but it will attract new FDI to come, and naturally it will support the ringgit over time. Lee says that while fundamentally the country is not that bad, there are certain elements of goodwill needed. The ringgit is among the weakest performing currencies in Asia amid the US's rate hike and a strengthening greenback.